So, over the last couple of days, we got some news that DWS, one of Germany's largest asset management firms, has had its offices raided by the police. Its chief has resigned, and we are in the midst of a huge multi-billion-dollar scandal. Now, when I tell you that this company is mostly owned by Deutsche Bank, you might not be so surprised to hear that there's a scandal in the works. They're a little bit prone to these scandals. We've seen hundreds of them in the past. We've seen some as recent as just a month ago, years ago, decades ago. They're everywhere. You literally can't get away from them when you're talking about Deutsche Bank. So what exactly is going on with DWS and Deutsche Bank? Well, of course, it's just another run-of-the-mill multi-billion-dollar scandal. It's just another day at the bank for those employees over there. But really, this shouldn't go unnoticed just because of how awful that company is. So firstly, let me explain just what DWS is, and it's basically an asset management branch of Deutsche Bank, or it used to be exactly that, but back in 2018, Deutsche Bank sold off 20% of the shares of that side of the company in an IPO. They held on to 80% of the company, and it now operates as its own individual entity, although it does work in close cooperation with Deutsche Bank. Now, it is a very big firm indeed. This is not a small fish. When it IPO'd back in 2018, it had assets under management of around about $700 billion. And right now in 2022, it's knocking on the door of $1 trillion of assets under management. Now, they run mutual funds, they run index funds and actively managed funds, all sorts of things like that, passive investment, alternative asset classes, everything you can imagine, including ESG or environmental, social, and governance-based investing. Now, ESG is a pretty basic principle. It's just the idea that some investors would like to know that their money is going to good uses. So bankers put together ESG indexes or ratings agencies, things like that, which basically are supposed to just measure how good these companies are in regards to the environmental impact they have on the world, in how they impact the world in a social sense, whether they promote diversity and equality and things like that. And then finally, in terms of corporate governance, in terms of how they're run as a corporation. Now, this got very, very popular really quite quickly, and so every bank in the world has jumped on the bandwagon, and they're all making claims about their ESG credentials, about how good they are and how much good they do with your money, including, of course, DWS and Deutsche Bank, and this is where this specific scandal really starts to kick off. In 2020, DWS put out a report claiming that 50% of the assets that they manage abide by their certain ESG criteria. Now, to be perfectly clear, this really isn't a difficult thing to achieve because they even set this own ESG criteria. They went out and they said that, okay, our assets that abide by the principles of ESG are going to follow this principle, and they're going to aim for this mandate and have this many female executives in the companies that they're investing, and all sorts of things like that. Now, because they're the ones who set that criteria, if they wanted 50% of the assets that they managed to follow that criteria, they could very easily just reduce its threshold a little bit. But no, DWS decided to go in a slightly different direction. Now, before we get onto that, ESG itself is actually a very controversial topic, especially right now after all that's happened regarding Tesla and the ESG ratings agencies, and in particular S&P or Standard & Poor's, that mega company, over the last few weeks. Now, very quickly, if you aren't up to date with that, basically S&P took Tesla off of their ESG rating. They claim that they do not appropriately protect the environment, they aren't working towards the betterment of humanity, and that they have a bunch of problems with the way that the company manages its staff. There are allegations and I believe even convictions of racism by managers in the Fremont factory in California, for example. And most people aren't really opposing that idea. They're not saying that actually racism is okay. What they are opposing is the fact that S&P in particular maintains really high ESG ratings for some pretty awful companies, notably oil companies who they claim are actually a net benefit to the environment, which really doesn't make any sense whatsoever. As a result of that, ESG has actually started to get sort of a bad name, and it's not even really a net positive anymore. Personally, when I see a bank claim that they abide by the principles of ESG, I think that they're just grifting. I think that they're just trying to get as much money out of their clients as possible, and they're willing to degrade their morals in order to do so. Now, back in 2020, as I said earlier, DWS came out and said that 50% of the assets that they manage abide by their ESG principles. The only problem is, a second report came out from an executive at that company, which basically said that they were lying, that was fraudulent, they weren't telling the truth, and they don't even get close to meeting that commitment. As a result of this, the police in Germany started to investigate. And then it came 2021, and more rumors were starting to emerge, and evidence started to build up against the company for this fraud. And so the US Department of Justice and the Securities and Exchange Commissions both opened up investigations into DWS as well. Now, it's at this point that this starts to be called a greenwashing scandal, the idea being that they are trying to disguise certain investments as green and good for the environment in particular, when in reality, they're not. Now, you can call that lying, you can call that being untruthful, but when it comes to a corporation doing that with other people's money, what that really amounts to is fraud. That's plain and simple. Now, unfortunately, we are still very early days in these investigations. This will take years to play out to its fullest extent, no doubt. These things just take a lot of time. There are massive multi-billion-dollar corporations at play here with very well-paid lawyers. So what exactly do we know so far? Well, first of all, we know that there is plenty of evidence that has already been gathered by the relevant authorities, and they're already starting to act on it. And those authorities are really quite confident that actually, yes, fraud has been going on, that there have been crimes committed, and that they're going to win these cases. Usually, these sorts of organizations don't really say anything until investigations are concluded, but German prosecutors have come out and say that these ESG compliances have only been used in a minority of investments. Of course, DWS claimed that it was half of their investments, 50%. So at the very minimum, we should be looking at a fraud amounting to tens of billions of dollars, mounting all the way up to hundreds of billions, or maybe even $500 billion. Now, this is obviously not good news at all. If I was an investor of DWS, personally, I wouldn't touch anything that comes even close to Deutsche Bank with a 10-foot pole. But if I were hearing this news, I would almost definitely be pulling my money out of that bank, getting them the hell out of there, and just avoiding them all the time. Now, everything sort of came to a head when the authorities actually raided DWS and Deutsche Bank offices. Police officers went into these banks' headquarters, they seized equipment, they seized evidence, files, computers, hard drives, everything you can imagine. Obviously, they were gathering evidence for this prosecution, but it being a rather vocal and outspoken move, well, it reaches news headlines, it hits investors, and people started to sell their stock. As a result of this, since this news came out just a few days ago, DWS's share price has fallen by 12%, and Deutsche Bank's share price has fallen by 4% as well. Now, it is probably worth noting that actually this hasn't been a particularly good time for either of these companies so far this year either. Even if it weren't for these scandals, they've already been struggling. DWS year to date is down by 13%, and Deutsche is down by 9%. Now, while this is a little bit surprising and definitely news and really breaking news for the financial world, it shouldn't really be surprising when we look at the history of Deutsche Bank and these companies. Deutsche has always been ridden with scandals. It is a pretty awful company by almost every measure. There are so many scandals that I literally can't even name them all. But some of the most vocal and recent ones that really jump out include laundering Russian oligarchs billions, laundering money for Syrian dictator Assad, and laundering money for Jeffrey Epstein. If that weren't enough on its own, well, Deutsche Bank were of course involved in a bunch of fraud surrounding the 2007 and 2008 financial crisis regarding US mortgage bonds. And just last month, Deutsche Bank offices were raided once again, this time for more evidence looking for their assistance in helping Syrian dictator Assad launder his millions. As a result of all of these scandals, which never seem to disappear, they all take a long time to resolve themselves, and by the time one of them's done, another one just pops up. Deutsche Bank's share price has really struggled over recent years. DWS as well has really struggled. It went public about 4 years ago, as I said, in 2018. And as of right now, it hasn't really made its investors any return over those 4 years. No doubt a lot of investors have been thinking that maybe the pain is over. Maybe the companies have finally learned their lesson that actually fraud doesn't pay because you get caught and you get fined. But really, no. Deutsche Bank is just such an awful company with a ridiculously poor corporate culture that this kind of thing is just encouraged, and it just keeps on popping up. And my bet is that it will always keep popping up. In my opinion, this is so ridiculous that frankly, the company ought to just be broken up and sold off into component parts. Major changes need to happen, or else nothing is going to change. Now, that's where we are now regarding this investigation. As I said earlier, early days. We aren't really sure where it's going to go from here, but we can be pretty sure it's not going to be good for the companies. What happens next, though? Well, the CEO of DWS has been replaced, and he's been replaced with someone from Deutsche Bank, of course. DWS are probably going to be found guilty of this. It seems pretty damn obvious that they are guilty. It will take years to develop, but they will end up being fined probably a couple of $1 billion, which will ensure that they remain unprofitable for this foreseeable future. As a result of that, the awful company culture will probably incentivize more fraud and more stupid risk taking that will result in another scandal in the future, and this never-ending cycle will likely continue. If you are thinking about investing in anything to do with Deutsche Bank, I will just caution you to be very careful. From my point of view, there is no reason to ever put your money anywhere near that company. They've proven time and time again that they can't be trusted. And frankly, we shouldn't reward companies which have such a flagrant disregard for the law and for basic morality. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. They can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, a site that allows you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you think that crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.